Okay, well, welcome. This is our live trading session. We have this every Mondays, and I trust you're going to find some value in this our short time together. Okay, so today we're looking at stop loss placement, mastering how you can improve or even learn how to place your stop loss. So we'll be covering understanding stop loss basics. We will look at key stop loss placement strategies. We'll just look at two. And we'll look at some common mistakes and how to avoid them. Okay. Oh, so the first thing that we want to even know, why do we use a stop loss? Why is it crucial? And I've written here that it helps protect our capital and it minimizes your emotions while you are trading. So it helps you, once you know where your stop loss is, you can hands off and let the trade play out. Okay, you can confidently say, oh, if the price comes to this level, then I'm no longer interested in it. Okay, so that's how you do your trade setups. Okay, putting your stop loss in the right place. It helps to protect your capital. And it also prevents large drawdowns so that it ensures long-term profitability. Okay, so those are the two main reasons why stop loss is very important. Okay, it minimizes your capital. It helps protect your capital, and it ensures that you don't have too large a drawdown. Okay, let's continue. So understanding stop loss payments placement basics. So what is a stop loss? Essentially, this is a predetermined price level at which a trader exits a trade. You know, a trader exits a trade to limit its losses. So what we're saying is that in a chart, okay, let's say this is top, this is the bottom. Okay, sorry, this is the top here, this is the bottom, right? So if price gives us a nice bullish engulfing candle here, right, and you place an entry on the next candle, right, you can put your stop loss below there. You can put it below there, expecting that price will pull back and then continue in your direction. That is your expectation, right? But you have predetermined, even before, perhaps before this entry happened, that this is where you're going to put your stop loss. So that if price does come to these lows here, you're no longer interested in that buy. Okay, so all we're saying here is that a stop loss is that predetermined level that you exit a trade to limit your losses. Okay, stop loss orders. What are the types? We have three main types. You can have a fixed type of stop loss where you use a number of pips. So you hear some people say, I'll only place a 20 pip stop loss or a 50 pip stop loss, right? So they will stick to that number of pips according to their trading strategy. Okay. Another way is to use what we call a trailing stop. And trailing stops is simply, so let's use that our example of engulfing candle. So if you enter on the next candle right? Once price moves in your direction, you can then move this stop loss from these lows here and move it to this level here, to the entry level, right? So you're expecting price to just move up and continue moving up like that, right? So as it's moving further up in your direction, you can move your stop loss again to another level there. Once it moves further up, you can move your stop loss like that. That is a trailing stop. Okay, you are trailing the price action so that when it eventually comes and breaks this structure here, then you're no longer interested in that buy. Okay. Right. So let's look at that. So the next one is the time-based stop loss. So this is usually, so you can say you are trading only the London session. And as soon as the London session closes, you are going to exit any trades that you have on. So this is based on the time, or you could even say, you could even say you only have 2 hours to trade. So within those 2 hours, once the 2 hours elapses, you are no longer interested in placing any more trades. And if you are in a trade already, you would want to exit that trade. Okay. So let's look at, so the other thing is that the psychological benefits of stop loss. It helps reduces your emotional decision making and hence increases or enhances your discipline as you're trading. So you become more disciplined once you have your stop loss in place. You know that once price gets to this level, you are no longer interested in that buy or the sell, because you have placed your stop loss to mark your line in the sand. Okay. Right, let's look at the next slide. So what are the key strategies? So one of the strategies that many people use is support and resistance based type stop loss. So just like what I was showing us earlier, that if this is a support level here and you have your resistance level up here, right? By the time you have an engulfing candle right here, right, you just put your stop loss somewhere below that level, and you expect price to, begin to move up in your favor, right? So you just put it below the support and resistance level there. Okay. So if you are going to have add-on trades, right? So let's say at the break of this structure here, you want to add some more trades there. Your ideal place that you can put your stop loss, instead of coming all the way to the bottom here, will be this minor support and resistance here. Okay, because that's the structural level there. Okay, so you can put your entry there and expect price to continue going up. Okay, so that is one way of using stop loss. Okay, of knowing where to put your stop loss. So the pro of this is that it aligns with the market structure. However, you can get hit if that level is not strong. Okay, and just what we demonstrated here. So price is moving up and down like that, making higher highs and higher lows. Now you can put your stop loss there, expecting that on this pullback here, price will not come and take you out. But sometimes, and that is what this second part here is referring to, that if price comes down to these lows, to these levels here, it can actually stop you out and then still go in your direction, right? And in that case, it's usually what we call price is looking for liquidity just to take some stops out and then still go in the right direction, right? But even if that happens, there's no problem. Just wait for the next setup and enter in the direction that you want, okay, of your setup. Okay, let's look at another. Okay, so the second one, no, that's not the one. Okay, so the second way of putting of where to know where to put your stop loss is using candlesticks pattern. So I've been talking about engulfing candles for a while now. So if you got a nice engulfing candle here, a nice bullish engulfing candle here, right, you can put your stop loss just below that engulfing candle. You know, you give it a few pips, right, so that you enter on the next candle and then you expect price to move up. Or if it's a bearish one, right, that is happening maybe somewhere there, it can put your stop loss just above that the high of that candle, and then you expect price to move further down. Okay, so this also uses price as a confirmation. That is a pro of this using this process. The con of it is that it can be too tight in volatile markets. So you can have a situation where after you've entered the sell here, price will then go up first, take out your highs there, and then go down. So that can happen as well. So just be aware and be conscious that price can do that. Okay. And even when it does that, is just take it as part of the trading and just say that, okay, you wait for the next break, wait for a pullback, and then continue trading in that direction. Okay. That just means that this one trade did not work out the way you expected it to work. Okay. So don't be perturbed, don't be worried about it. Just take it in the stride and just know that out of the many series of trades you're going to take, the many setups you're going to be taking, just this one won't bring your account down, right? As long as you're using the proper risk management, okay, for each trade. So just wait for it, let it play out, okay? Let's look at the next slide, I think is the... Okay, so common mistakes and how to avoid them. Okay, one is placing stops too tight. You know, avoid getting stopped out due to normal price fluctuations. Okay, so we'll look at a chart and just see how that can play out. Okay, after this, so let's just look at this first. So what we're saying here is that supposing you have your nice engulfing candle as your setup, right? And then you've entered on the next candle right here. Okay, you've entered you placed your entry and it's triggered it. Now you now put your stop loss somewhere there. Okay, this is already tight as opposed to you putting your stop loss maybe at the lows here. Okay, it's tighter, but the issue is sometimes price could come and take you out and then go in that particular direction. So it's preferably it's preferable that you put your stop loss at a let's say a convenient place, or a place that you can see. When you look at the charts, you can say that, okay, if price does come to this level, then you are no longer interested in that sell or in that buy. Okay, so it must always be at a reasonable place. Okay, we'll look at it on the charts shortly. Okay, then the next mistake is not adjusting for the trade size. So somebody can just say, oh, I'm going to use one standard lot. You just place it not looking at does your account, the capital in your account, can it take that one standard lot? Okay, so or you say, oh, I'm going to put 100 standard lots. Okay, that could wipe out your account. So always trade and place your stop loss in accordance with your risk management. Okay, it must always be in accordance with your risk management. Okay. Okay, the next one is your the next one is your emotion, your moving stops emotionally. Okay, we don't want situations where you'll be moving your your stop loss because of your emotions. Okay, we don't want that. So you need to stick to your strategy. Oh, sorry about that. Let me see. My other device just went off now. Sorry about that. Let me get okay, it will come back up shortly. But we don't want you to be moving your stop loss because you're not of emotions. We don't want that. Okay, let me share the screen again. Okay, so we want it to always be that you are trading with discipline and focus. So let's look at the conclusion of this whole thing here is that stop loss is a tool for protecting your capital, not just your exit point. Also, you must stick to your stop loss with discipline so as to enable you to develop that consistency in your trading. Okay, the more you stick to your stop loss level, once you have decided that this is where you're going to put your stop loss, then the more consistent you begin to become. Okay, so let's look at a chart. Let me bring a chart up. Where is this chart? It's here. Let's share now. I cannot see the chart. Just a sec. I want to. Okay, there it is. Okay, so we're saying that your stop loss, when you have your stop loss, right? So on this pair, this is gold, right? So if you said that, okay, this is a break of structure here, right? And price has moved up. So by the time it's coming back down, if you are still with a bullish bias, right, where will be your stop loss? You can put it below here. right? Below this zone here. You can put your stop loss there and saying to yourself that as long as price trades above this zone here, you're okay for a buy. But as soon as price then closes below these levels, then you're no longer interested in a sell. Oh, sorry, in a buy. Okay. So that means if price closes below this level,
supposed to give me your Baba, I will give you my Baba. Come bring your Baba.
okay. So as soon as you know that you say to yourself that once price closes below this zone here, then you're no longer interested in a buy. Okay. So that is how you locate where you want to put your stop loss. Okay. Let's look at another pair. So look at this pair now. We're just looking at where to put a stop loss, where to realistically put a stop loss. Right? We're not looking at trading strategies or anything here now. So let's assume that price has just broken these highs here. Okay. And this candle has just closed here now. So you are now saying, okay, you are entering on the next candle. Where would it be a reasonable place to put your stop loss? You can say, okay, I'll put it below the lows of this candle. That is fine. Or you can say you put it below the lows down there, such that if price begins to move down and closes below this level that you've marked here, then you're no longer interested in a buy. Right? So that is how you have to look at your trade setups and placing your stop loss. Okay? So you can either use a fairly tight one or use a more liberal one. Right? And then price goes in your direction, and that is good. Okay? So look at this situation here. That was on Friday. So price closed below here. So you're looking for sells. Okay. Supposing you put your stop loss just here. Look at what price did. It came out, stop you out, and then eventually did go in the direction that you expected. So that's what we say, that sometimes you should be liberal with your stop loss. Okay. Don't make it too tight. Okay. Don't make it too tight. Some could put it here. Some could put it here. You know, there's no way you will know that that price will come as high as this level here. Okay, so you won't know. So don't even think that you want to begin to put your stop loss like 1,000 pips away. No, that's not what we're saying. We're just saying just be reasonable with how you place your stop loss. Okay, so once you see a break of structure, you can enter here and put a tight stop loss if you like, right? Or you give it a bit more space. And even when you give it a bit more space, sometimes you can still get stopped out, and then price will still go in the direction that you thought it would go, right? So just take it as part of the trading system. Okay, just take it as part of the trading process. That is what this business does. Okay, so but it won't be that it's on everyday basis that you get setups like this. Okay, that you will be getting stopped out consistently like that. Okay, so just know that it's not every day that will happen. You will still get some trades that will work out very well for you. Okay, so we'll use those two examples And then let's see, do we have any questions? Is it clear with regards to placing stop loss? Okay, this is even pound USD. Okay, I was thinking of pound yen earlier. Okay, this is what I looked at. So a break of that structure. So as soon as this price closes, then you are looking to buy. Okay, you can put your stop loss just below the lows there of this nice bullish engulfing candle. You just put your stop loss there, or you just give it a bit more breathing room, right? And expecting price to just go like that. So perhaps today, so today or tomorrow, price will continue to be bullish, possibly. Right. So let's see what price will do during Asia session today. I have a buy on one of my accounts on pound yen. So, and I'm really looking forward to it to go up. So let me see, let me show you what I'm looking at. This is the daily chart. So I'm expecting price to come to these highs here, at least. So that's 194.78. So I like round numbers. So let's just say 194.80. It's here now. Let me mark it here, 0.8. So that's the 80 level. Okay. So I'm expecting price to come to this level here, at least before it starts giving any major pullback. Okay, that's my expectation. Right. And if it's still very bullish, if it closes above that level there, then I expect it to pull back and then continue going up. So we'll then look for these levels up here. Right. So we're just going from one step to the other, one step to the other, one step to the other. Okay, so somebody is asking about putting trades, putting your stop loss in a sideways market. Okay, so that will also depend on your kind of but that's an excellent question. Let's look at this. I think this was going a bit sideways earlier this morning. So you can see this is pound yen, right? It started from here, went up. That's earlier in the morning. Asia session, right? Went down, then came up, right? And then all through this level here, look at what it was doing. It wasn't going, massively up or massively down. It was just moving sideways, right? So what do you do in situations like this? You have to stick to your trading strategy. So if your trading strategy says that you're looking for a break of structure, right? Once you have a break of structure there, where will be your stop loss if you are to enter on the next candle? You can put it tight somewhere there, or you can take the lows there. Okay, so you say to yourself, as long as price does not take me out here, or if it does not take me out at these lows here, I'm still bullish. Why? Because you have a break of structure here. BOS. Oh, don't mind my writing. Let me remove all that. So let's put it here like this now. So you can put your stop loss there or at the very lows there. So all that is happening here when it's just going sideways, you are not too concerned. Okay, you're just looking at the break of structure and waiting for price to move in your direction. Right? And it also happens even on the higher time frame. I think there was a time price was just going sideways on pound yen. This is the 4 hours now. Look at what price was doing here. This is a weekly. This happened through the week. So this was, I think, 21st of February, all the way to 27th, right? It was just moving sideways, okay? So before all this happened, what did you see? So price was coming from here, pushed up, pushed down, that's break of structure there, pushed up again, and then pushed down, another break of structure there, right? Pushed up, right? And came down, another break of structure. So what is your, what do you expect from the market? You're expecting, as long as it does not break these highs here, you're expecting it to push down. So once it pushes up again to your preferred level, so let's say somewhere there, you enter your sell and you put your stop loss at the highs there, expecting price to move very well down, right? But in this situation now, you see, if you just stick to your stop loss levels and your take profit levels, you will have eventually be stopped out the following week. Right. So, but there are situations where we advise that when price is moving sideways, if you must take a trade, just take smaller take profit levels. Preferably, don't even take a trade when it's moving sideways. Yeah, preferably. However, if you must take a trade, if you have a setup, if you must take a trade, then be prepared to reduce your take profits. So instead of expecting price to come all the way down to these lows here, you just reduce it and just say, okay, I want to see price just come to this level here. So if it does come to that level, good. If it does not come to that level and then it goes all the way and take you out with a stop loss, that is fine as well, because you are only in on one trade or maybe two trades. Out of the many trades you are going to be taking in your trading business, you are going to be taking thousands and thousands and thousands of trades. So this is just one or two of those thousands of trades. So even if you get stopped out, it's still okay, because you're using proper risk management. And you have your stop loss at a nice place, nice convenient place, that once you know that price gets to that level, then you're no longer interested in a sell in this case that we have here. Okay, I hope that helps. Okay, do we have any other question? Let's see what it's doing. Oh, very good. It's pushing up further. Okay, so thank you so very much. We appreciate your attendance today, and we'll look forward to Look forward to more interactions like this that will help us get better with our trading. Okay, I'll upload this on the YouTube page once the recording is uploaded, and then I'll let us know. But if you have any questions, please just put it on the platform. Okay. Lovely. Thank you all so very much.
Thank you.
Lovely. Thank you, my dear sis.